Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, May 30th, and we are now in the final hour of the trading day. As many of you know, I believe that the prices in the last hour, and especially the prices near the very close of the market, are the most valid prices for me to make my entry and exit decisions for my current trades and for my potential trades. So today is well, it's been mixed. The Dow is currently down. We were up much higher earlier in the day, and at one point about an hour ago, all the indexes went negative again, but the Nasdaq and the S&P have gone slightly positive. So maybe a little ray of hope that we might end up green today. We shall see. So the format for today's show, first of all, we're going to run the government disclaimer, the legal disclaimer. That's about 40 seconds. Then we're going to come back. We're going to take a look at my current positions, when I got in them, why I got in them, and how I'm going to manage them going forward. And after that, we're going to go down through my watch list, all the stocks in my watch list, and we're going to see if there are any interesting setups for potential entries today. And then after the market closes, I'm happy to answer any questions that you have about anything we did today. Or if you'd like me to take a look at any of your own stock symbols, I'd be happy to take a look at those and give you my humble opinion. So, all right. So what we're going to do right here is we're going to run the government disclaimer, and I will be back in about 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. All right, so let's go ahead, take a look at my current positions and see what we're going to do with them going forward. All right. So the first position here is Apple. I did buy Apple yesterday when we went below the 30 RSI and closed back above the 30 RSI on a closing basis. So we were under during the intraday and we closed above at the close. And what that tells me is that the market tested the level under the 30 RSI, but at the end of the day, the final price, the market didn't like the prices down there, and so it closed higher. So that gives me a good risk to reward ratio. If I'm wrong with a close under 30, I'm out relatively small for a small loss, and if I'm right, then I can let it go, be open mind about it, and let the profits run. So with any trade, you need to have a good risk to reward ratio. It doesn't mean that just because you have a good setup, it's going to work. Very often it doesn't. My winning percentage over time is about 70%. So, I take this Apple trade here 100 times, this exact same trade 100 times, based upon my results, I'm probably going to lose 30% of the time. But, if you can take something where you win 70% or lose 30%, and your wins are greater than your losses, then that's a pretty good proposition. So Apple is down 36 cents at the moment. It was up earlier. Didn't get too close to my profit targets, but it was up earlier. Right now we're at a 30.40 RSI. So we'll see if this holds. If this closes under 30, I'll go ahead and just lock in that small loss. And then I'll look again in the future if it can close back above 30, but hopefully it will close above 30 and we'll be able to keep the position, but we shall see. Intel. I did buy Intel yesterday at the close of the market, and the reason that I bought it, similar to Apple, we were below the 30 RSI and then we closed back above the 30 RSI. In this particular setup, not only were we under the 30 RSI and closed back above the 30 RSI, but MACD did go positive and we did close back up into the third ATR channel. This thick line here is the third ATR channel. So as you can see, I did hit one of my profit targets today, which I'm grateful for, because that takes a little that takes some chips off the table at least a price where I did make some profit, even if the stock in the future goes down. I was able to at least lock in some profit. Pays for your commissions. You've heard me say this before, but your trading commissions can add up to about 20% of your yearly profits. So, if you have some type of approach where when the stock moves your way, you can at least lock in those profits to take care of your commissions. It's a good policy. So we're at a 34.32 RSI at the moment. If it closes back up under 30, I will go ahead and take my take a loss and get out of the position. The blue line up here, this is the 50 RSI. When you come from a 30 reading up to a 50 reading, a lot of times that 50 RSI reading above you is going to act as resistance. So if we go up and test this level and get rejected even intraday, then I will go ahead and just lock in the profits on this trade. But thankfully, this is up since we've bought it, and did hit one profit target. Lockheed Martin. I did buy Lockheed Martin here yesterday, and why did I buy it? Well, we've been in this uptrend, making higher highs. We came down back into the value zone. The value zone is between the two green lines. The two green lines are the plus 1 ATR and the negative 1 ATR. So anywhere back in this channel is considered the value zone. So we moved up, we came back into the value zone, which is totally normal, totally to be expected. And then yesterday we did wash out this previous bar and then reverse back up, close above the previous bar's close. That's called a V1 entry. So, the context of the chart was positive, where we're moving up back into the value zone, which is normal. We had this bar here, yesterday's bar, washed out the previous low, tested the 20-day moving average, went below the previous day's low, and then closed above the previous day's close. So that is why I took the trade. Basically, this area down here was tested and the market decided it did not like it down here. So it's always to get into a trade when the price action is confirming to you that it just recently tested a level where you do not want it to go, and then it reversed. So that is why I took the trade. As you can see, I did hit one profit target up here today, which again I'm thankful for. My ultimate profit up on here is about $350. That is the 70 RSI. So if it closes, this was the washout day, this day here that triggered the V1. Generally, I initially use halfway, the 50% mark of the washout bar. So if we get a close back under this red line here, I'll go ahead and just get out of the trade to the downside. If it keeps moving up, then I will start using probably the 5-day or some other method to trail the trade, because I don't want it to come all the way back down. But at this point, it has not moved high enough for me to implement a tighter trailing stop. And if we get up here to this blue line, which is the 70 RSI, if we test that intraday, get back out, then I will that will be my signal to lock in profits here. But anyway, up today, thankful for that. Glad we hit one profit target. And we'll see where it goes from here. All right, give me a second. Okay. All right, silver. I did buy silver back here. I've been in this trade for a while. Did buy silver back here on the 20th of May when, again, we went under the 30 RSI intraday, closed back above, and in addition to that, we also closed back above the third ATR channel, which was positive. My initial stop was a close back under 30. So, you know, there's generally there's support at a 30 RSI. If it breaks through the 30 and closes below the 30, then it invalidates that support. But, you know, it was under the 30 intraday, closed back above 30, and that was my signal. So it moved up. We phased out of about, now I can't remember, about 40 to 50, no, 60%. That's right, because that was such a big bar. So we phased out of about 60% of our profits here. Then it went down. It still kept above the 30 RSI and closed back in the channel. So I did keep the remaining position. And then yesterday we hit a couple profit targets. And again, today you can see that we hit a couple profit targets. So anyway, this has been good. This has been a nice profitable trade, which is nice because the market has been so tough for the longs, and you know, almost any signal on the long side, the long sides have not worked out. So you know, that's why I like to add metals and other commodities and other non-stock ETFs into my the stocks and the ETFs that I'm trading, to get a little diversity, and so you're not reliant 100% on stocks. So right now we're at a 41.97 RSI. With the remaining shares, if it goes up to the 50 RSI and tests that and fails, then I will lock in. I will get rid of the entire position. But luckily we've had this this profitable trade here to help mitigate some of the losses in the stocks. All right, SPY. So in case we have some new viewers today that are not familiar with this, I do buy the S&P ETF each day at the end of the market, at the close of the market, and then I sell it first thing in the morning. And why do I do that? Well, it's based upon this study, but since 1993, if you would have bought the SPY on the open in the morning, sold it each day at the close in the afternoon, you would have actually returned a negative 5.2% return. But if you would have done the opposite and bought on the close in the afternoon, sold the next morning on the open in the morning, long term, you would have made 568%, meaning that more than all performance came in after hours trading. And so I have been using this close to 2 months now. I really like it. I mean, I like that the back tested results. I can see long term this has been a profitable approach. Not that there are not times of drawdowns. Certainly there are times of drawdowns. I mean, any trading approach is always going to have drawdowns. If somebody tells you that they're not going to have drawdowns, be very suspicious. But you know, you can clearly see it had a nice run up for a few years, had a drawdown for a few years, back up. But long term, you know, I'm looking at this as long term. I know long term it has a good track record, and that is why that's why I use this. So yesterday I did buy this yesterday at the close, and then I sold it first thing in the morning for a profit, which is nice. Then it did go up a little higher, and now it is lower than where the open was. So I will be buying this again, 10% position size of my account. I will be buying this again at the close. All right, here's the stinker for the day. I'll tell you what, I've had some stinkers the last few days. I've had more whipsaw reversals in the last week, I think, that I've had in the last 6 months. And a whipsaw is, where you buy something and immediately reverses. I did buy oil here yesterday when we had this nice V1 entry that also closed back above the 100-day moving average, and it also tested the lows of the previous range. So, would I take this? Obviously, this has been a horrible trade, but would I take this trade again today or tomorrow if it came? I certainly would, because, like I said earlier in the live stream, if you give me this trade setup 100 times, I'm confident that I'm going to win and have a positive trade somewhere between, well, based on I trade about 70 times. So you give me this trade 100 times, 70% of the time, or 70 trades are going to end up positive and 30% are going to end up negative. And unfortunately, this is one of the days that it ended up negatively, and it looked so good yesterday. I mean, it really did. So my stop is the halfway mark of this washout bar. This is the V1 entry, meaning that we went below the previous day's low, closed back above the previous day's close. Barring some kind of a miraculous recovery in this last hour, I will be getting out of this. At one point this was down 4%. If it had got down 5%, I would not wait for the end of the day. I would just have to go ahead and use my emergency stop. But this is unfortunate. On the bright side, this is under the 200-day moving average, so I only took a 1/2 position, thankfully, and that is why I take 1/2 positions under the 200, because prices are not as stable under the 200 as they are above the 200. But nonetheless, I still do take trades when they're under the 200 because there is an opportunity there, but I position size only the half position because it's under the 200. So just real quick, Apple current positions, it's a 30.64. If it closes under the 30, I will be getting out. If it closes above, I will continue to stay in. Intel does look like it's going to continue to close above the 30, and we did hit one profit target, so we'll watch that. Lockheed Martin is moving nicely our way, did hit one profit target. Silver, couple profit targets today, thankfully. SPY, we had a profitable trade from yesterday's close to today's open. And then USO is our problem child. If we do close underneath the halfway of yesterday's bar, I will go ahead and just lock this in, lock in the loss. So that is where we're at. Okay, so let's get to our my watch list and see if there's anything interesting for today. And before we do that, I saw this on Twitter, and kind of spoke to me, and so I wanted to share it here. This is at Beyond the Trades, but they say, I truly believe that it is more important for a trader to learn how to be a professional and what that requires than it is to teach them trade setups and strategies. And I couldn't agree more, everyone. Trade setups and strategies is really just one part of the puzzle. It literally is one part of the puzzle. To me, the more important part of the puzzle of becoming a profitable trader is, like it says here, how to be a professional. And what does that mean? That means how to approach the market, how to control your emotions, the mindset that you have. It's super important. I mean, the psychological aspects of trading, in my opinion, are much more important than the setups and where you enter. I mean, don't get me wrong, that stuff's important, but if you're in a drawdown, you're in a losing period. A lot of traders, they kind of go off the deep end and they start making bad decisions. They take too large position sizes. They get thoughts in their head about, well, this is too low, it can't go any lower. And that's exactly what they're talking about here, learning how to be a professional and what that requires. You know, it requires patience. It requires control of your emotions. It requires keeping a positive attitude, not going into a downward spiral. So I wanted to share this with you because it really is important. You got to have the mindset of a professional trader, and that mindset is patience, not getting frustrated, not getting down, proper position sizing. It's the component that you need to be a professional and profitable trader over the long run, not just your trade setups and strategies. So I did just want to share that with you. All right, let's get on to see what we have here. Let me take a look at the markets real quick. So yeah, we're down on the Dow, we're down on the NASDAQ, and we're down on the S&P. So it's another red day. Boy, we've had a lot of these, haven't we? All right. Let's see if there's anything interesting here. All right, so here's Amazon. We're at a 41.17 RSI. There's really nothing interesting here at the moment, folks. Where I would be interested is if we could come down here, get closer to a 30 RSI, get closer to this convergence of the 200-day moving average and the 100-day moving average. That, in my opinion, would be an excellent place to get into a long position on Amazon. There are a lot of buyers waiting for this exact thing to happen down here, both from the 100, the 200, and the 30 RSI levels. So I think if we can get down to this level, it would be really a sweet spot and it would be a good risk to reward ratio. But you know, going back to that becoming a professional meme that I showed you, or that slide that I showed you, you know, don't get impatient. Wait for it to come to you. Let the trade come to you. Don't go to the trade. Boeing. Well, it's got some mixed signals. I mean, MACD is positive. We're under the 200-day. For me to get interested in this trade, I would like to see a close back above the 200-day moving average, which should also trigger this fractal here. Fractal is when you have a high point with two lower highs to the left, two lower highs to the right. So moving forward here in the future, if Boeing could close back above the 200, I think that would be an interesting point, but it doesn't look like there's anything today. Alibaba is just continuing this constant, relentless downtrend. It's a 25.17 RSI. Of course, this is a casualty of the trade war, or whatever you want to call it, with China at the moment. But you know, I think eventually this will have a nice rally, but right here there's really no reason to buy it. Caterpillar, similar to Alibaba, has moved down. We have been able to form a bit of a bottom here, a bit of a range. We're at a 32.30 RSI. You know, it's low, but that's about all it is to me. So really no interest on Caterpillar. Canopy Growth did try to catch support at the 200 yesterday, did immediately move up this morning, but it got sold into, and currently we're under the 200-day moving average. So nothing really on Canopy Growth here whatsoever. Probably, you know, if we could get to a 30 RSI down in this level, that might give us a good opportunity for a good risk to reward ratio. But there's really nothing here. Even if we close back above the 200, this would concern me a little bit because we had such a big bar yesterday. Cisco. Well, you know, Cisco gapped up here, held the gap, which was good, but then finally lost the gap here on the 28th. It's under a 50 RSI, so it's showing that it's losing momentum. A close back above the 50 may get me interested in Cisco to the upside, and a test or close below and close back above the 100-day would also be good, because we have a confluence of signals here. We have the 100-day and we have the third ATR channel. So that might be something in the future, but not today. Delta Airlines is somewhat interesting. I mean, look at this move down. It's just brutal, right? Just brutal. But yesterday we poked our head below the 200-day moving average right here. This is the low of the previous range. If this were able to close back above the 200-day today, I would take it because it would give me a good risk to reward ratio in this area, and it would give me some nice upside potential with a small downside potential if I'm wrong. So the 200-day moving average reading on Delta Airlines is currently 53.23. So I will be watching that level at the end of the day, and if it's able to close back above, I would certainly consider buying that at the end of the day. So DDM, good back tested method on DDM. If you have a close under and then a close back above the 200, like here, I did buy DDM here because the previous day it closed below, we closed above, and then it closed under, forcing me to get out. And I will stay out of this until the price closes back above the 200, and hopefully eventually it will catch a trend one way or the other. If it catches a trend to the upside, I'll be in it. If it catches a trend to the downside, I will not be in it. DDM was the double leverage Dow. This is the regular DIA. This is the regular Dow ETF. A close back above the 200, I would consider that today. Disney did rally earlier today, setting off a technical V2 intraday. You see how when we were at the high, here's the 3 bars, day 1, day 2, day 3. Day 2 washed out the previous day, it's low. Day 3 today, at one point during the day, did trigger the V2. Some people trade these intraday on intraday signals, but as you know, I like to base my entry positions and exit positions on the final price of the day because I think it's the most valid. So somebody that bought this intraday obviously is underwater on this trade now. But if it did close back above, I would consider. If it did close back above, I would consider getting this, but not unless. So we'll mark that for fun, just so we don't miss it when we take a look back around. Etsy. I did have to get out of this trade yesterday. I took this V2 trade here, took a profit target here, and then it just reversed. This is what I was talking about with these whipsaw reversal trades that I've had. I've had 3 of them in the last 2 weeks, and this was one of them. I had to get out because it closed under the 100-day. So currently it's back over the 100, but I wouldn't buy it here anymore because of this big bar. So yeah, that was a tough trade, but nothing on Etsy. Facebook. So I've been watching Facebook for a while. I'm really waiting for it to trigger this fractal here. Here's the peak with the 2 lower highs to the left, 2 lower highs to the right. If we could get above this fractal here, it would also put us above a 50 RSI, which would be very positive. So I am watching Facebook, and we'll mark that just on the outside chance that it does trigger today. Actually, I better write down my numbers there for Facebook just in case. I think it's an outside shot that it's going to trigger, but just in case, it's good to know exactly how many shares you're going to be buying and have it right in front of you so that when the time comes, if you do have to buy it, you have those numbers instead of going, how many shares did I buy? And perhaps buying the wrong amount of shares or too many shares as well. All right. Hey, Frederick, how you doing? Glad to see you, my friend. And Mount Doji, how you doing? Good to see you too. Thank you guys for showing up. I appreciate it. All right. All right, so let's get back. 5 below. It did close under the 100. Now it's closing back above the 100. The point is that I wouldn't buy it here because we're at a 45 RSI. Most likely my profit target, even if this continues up, will be about right here, which here to here. That doesn't give me a lot of potential upside compared to how much downside I have. I actually have more downside on this trade than I have upside, technically speaking. So nothing on 5 below. Gold does look like, let me grab my gold chart over here. So it does look like I will be entering gold as long as the 5-day moving average crosses over the 20-day moving average. You can see the 5-day reading is 121.14. The moving average for the 20 is 121.15. So on a closing basis, if this is equal to this or greater, I will be taking a long position in gold, and this would be a trend trade because of the moving average crossover. So we definitely have to watch gold here, and I have to wait and see whether or not we get a close of 121, at least 121.15 on this 5-day reading, because the 20 is 121.15. So we'll have to watch that at the end, see what happens. You can see though, I mean, look at the big bar on gold. Look at the increased volume on gold. So, and it actually triggered that fractal over here as well. So, some technical strength on gold, and we had MACD just went positive as well. So, moving average crossover, fractal, MACD, and large volume of large volume. So, a lot of signals on gold. So we'll have to wait and watch that one till the end. Google did lose the 200-day back here, lost it, pulled away. We're at a 35.89 RSI. In order for me to get interested in Google to the downside, I'd have to have a close below 30 RSI and then back above. And to get interested in Google on the upside would have to be a close back above the 200. So nothing on Google today. Give me 1 second. Goldman. Well, we're getting down to the very low RSI reading here. If it closed under 30 and over 30, I may be interested, but has not closed below 30 RSI yet. So nothing at this point. IBB. Nothing on IBB today. It's down. One thing that is shaping up here is we have this low. We had a rally. We are now testing this low. You can see the MACD readings, these red bars to the downside. They were very strong to the downside, very deep. And now that we're back here at that previous low, you can see there's barely any red. So that's setting up to be a double bottom with a bullish divergence. But we need, so the context, the big picture on this, the zone is good, right? We have a bottom, we have a rally, we have a double bottom with a divergence. So this is good, but it doesn't mean immediately buy. It's just setting it up. The setup looks good. Now we need some kind of trigger. What would that trigger be? Maybe a V1, V2, a close below 30, back over 30, something like that. So this is starting to shape up, but it's not shaping it up enough to make an entry at this point. Until we have the Russell. Well, getting out of that under the 200-day was the right move, right? Because it has really pulled away. So where would I be interested on? IWM, close back above the 200. That would be one option. A 10-day moving average closing over the 50-day moving average. That is another option to the upside, although it's a long ways away from that. And or a close under 30 and back over 30 would also be potential. So nothing there. Coca-Cola. Looks like, it could potentially trigger a V2 entry here today. It would have to close back above May 28th's close, you can see that it just tested it and rejected it. I don't think I would buy this because even though it is a V2, the bars preceding it were very heavy to the downside. I'd rather see this move up, go down, move sideways for a while to know that some of the sellers are gone and it's not continuing to go down, and then do this formation where we have a down up kind of situation. So I don't think I'd be buying Coca-Cola here for that reason. Lockheed Martin we have. So this is a good example. You see how Coca-Cola makes a higher high, goes down, and immediately goes back up for this V2. I don't like that as much as on Lockheed Martin, where we do the same thing. We go up, we come down, but you see how we have 2-3 days of moving sidewards, giving some stability to the trade, and then having the V1. That is what I like much, much better. I learned this from studying with Kerry Lavorne. He calls it a squeeze play. Make sure that you're in an uptrend, have it come back down into the value zone, have it move sideways, have it spike down, reverse back up, and trigger you in the trade V1, V2. But you see the difference? See the difference how this moved up, just came down, and immediately bounced back up. That is definitely not as strong as Lockheed Martin, where you have the same move up, move down, sideways for a few days, then spike down, then move back up. So hope that makes sense. Hey, Bruce. Yeah, gold is a fractal. Gold's a fractal. Gold is close to a crossover. Gold has high volume. Gold has MACD. So it does have a lot of indicators going its way. Does that mean it's going to be a profitable trade? 100% no, right? It's just that the indicators are lining up, which is better than them not lining up. So we'll definitely be watching gold for sure, Bruce. All right. Financials are in trouble with low rates and inverted yield curve. Yeah, seems like everything's in trouble right now, except for gold. MasterCard. Just kind of choppy. No real structure to this or any potential buys here. Merck. Well, back to like Coca-Cola and back to Lockheed Martin, it has moved up nicely. It's come down, but I wouldn't want to take a trade off of this steep down move right back up. Again, this is nice now. It's moved up. Now it's moved down. If this can move sideways for a while, spike down, reverse, that'll be our entry. That's really what we're looking for. So nothing yet on Merck. Hey, official Measy 100. How's it going? Hey, I just found your channel watching stock vids. Are you a day trader or swing trader or both? I am mainly a end of day swing trader. I think that's probably the right label. Yeah, I am a swing trader, a bit of a trend trader also. Sometimes we buy, deep dips for 2 or 3 or 4 day holds, kind of snapback trades. But I think the best label would definitely be swing trader / trend trader, but end of day trader as well. So I hope that helps. Thanks for coming to the live stream. I appreciate it. If you have any questions, official Measy, just let me know. All right, so Microsoft, not really anything going on here. Possibly a close below the 50 and back over the 50 might be interesting. Netflix, it has completely lost respect for the 100-day moving average here. We're below, we're above, we're below, we're above, we're below. So at this point, we have definitely lost, the market has lost respect for this. Possible entry on Netflix would be down at the 200-day moving average, a close below and a close back above. That would be a good entry. And again, have the mindset of being patient. Let the trade come to you in the area that you've determined is the sweet spot. And to me, this is the sweet spot. Official Measy says, that's kind of what I am too. I buy at the end of day and sell in the morning before it drops. Yeah, well, one of the trades we do is exactly that, which is the S&P 100 trade, where we buy in the afternoon and we sell in the morning, because statistically, a lot of the gains of the S&P since 1993 have come in after hours trading. So, all right. So let's go on to Nike and see if there's anything with Nike. We moved down. We closed below the 200. Oh, just give me 1 second. All right. So we closed below the 200-day moving average. I would, at the very least, look for a close back above the 200-day moving as an entry. Philip Morris did play with that 200-day moving average for a couple days, did find resistance, and now it just moved down below. So those buyers that held it up at the 30, they gave up and they got overpowered. And so now we are, looks like we're going to close below the 200-day. On the other hand, we're at a 2909 RSI. So, you know, it could be a potential to, if we close back above the 30 RSI at the end of the day, that might be a potential trade, but that would be a snapback trade. We're just looking for a move from the 30 RSI back to the 50 RSI. But it would concern me because you have the 200-day overhead. Even if this does close above 30, you're still going to have that 200 above you. So I don't want to get involved with Philip Morris here. At the very least, I would need a strong close break above the 200 for an entry to the long side. PayPal, you can see it is working on a bit of a V2 here. Here's day 1, day 2, day 3. Day 2 washes out day 1. If this closes above day 1's close, I would consider that. And it does have a higher low. If it does trigger, it would have a higher low preceding it, which is positive. So I don't think it looks likely, but I am at least going to run the numbers here just in case it does, because it is up today. It's showing some good relative strength. So let me just go ahead and run the numbers real quick, just so I have them at my fingertips if I need them. Okay. All right, QLD. I have been looking at QLD for quite a while, and it's possible that this may close back above. This would be a longer term trend trade for me if it does happen. This is a double leveraged ETF, so you would have to buy half the position to keep your numbers correct, because it's double leverage. It moves twice as much as the regular Qs. So let's see. Yeah. So if this does close above the 200-day here, and the 200-day is at 86.35, I will for sure be buying this, and I will be holding this as a trend trade as long as it stays above and closes above the 200-day moving average. I will phase out as it goes, but that's about the only limitations that I'll have. So 86.35 is the 200-day moving average. Currently we're at 86.08, so not quite there, but definitely something to watch at the end of the day. Here's the Qs. You can see that the QLD is down further than the Qs, even though they're the same thing. And the QLD, because it's double leveraged, has a little bit more momentum, and it acts as a bit of a filter. So I am going to key off of the QLD here and not the QQQ. Silver we hit 2 profit targets today. Don't have much of that position left, but we'll just hold it until the technicals tell us to hit more profit targets or just to get out of the trade. But at this point, I think we only have about 10% of our position left. SPY, We did buy that in the morning, sold in the afternoon, or I'm sorry, bought in the afternoon, sold in the morning. We don't want to do the opposite, right? Yeah, we bought yesterday at the close, and we sold it this morning for a slight profit, which is good. So, other than that, we did test the 100-day moving average, which is positive, and it looks like we may be closing back above here also. So we have 15 minutes. So I will be buying the SPY today for the overnight trade. All right, let's take a look. Yeah, you're right, Bruce. Nike did hold the 250. Almost. It's not quite above it yet. PM Big MACD. Yep. Frederick, what do you do when the market is lost the 200 MA? Which signal do you need to enter the trade? So if you lose the 200-day moving average, Frederick, at that point, what I'm looking for, aside from it closing back above the 200, is a close or an intraday move under 30, intraday under the 30 RSI, and then a close back above. That is one entry, and or a moving average crossover system like the 520 or any moving average crossover system that happens. They're valid, Frederick, even if the price is under the 200-day moving average. After the market closes, let's see if I can find an example for you to show you a good example. Square, or a double bottom with a divergence and a V1 entry, something like that as well, Frederick. So there are, you can buy under the 200, but you really have to make sure you have a valid signal to do so, because things are a little more precarious under the 200. Okay, so squares, nothing there. AT&T. This, like Coca-Cola and Lockheed Martin, we've moved up nicely. We've come down, which is fine. We are starting to kind of move sideways. It hasn't been too heavy. It hasn't been too strong of a downward slope. So a couple more days down, or even one more day down at this point, moves down, reverses back up. That would be a decent entry signal as well. Boy, yesterday on TLT, we hit that 6 ATR channel, and we had the pattern. Do you see how we actually closed higher than the previous day's close, but we closed lower than the open? That's generally a bearish signal, everyone. And I was kind of hoping that this would be bearish because, these are bonds. People are piling into bonds for safety because of the market. So if you see something bearish in the bond chart, that could possibly be bullish for stocks, because if we're at a short-term top on bonds, we're probably at a short-term bottom in the market. Not 100%, but possibly. But today, we ripped right back up. Although, interesting point I want to make here. Do you see the volume on yesterday's move? Do you see today we've moved higher, but it's on lower volume? So I haven't talked about this much, but when you see something moving up and up and up, and it keeps moving up, but the volume is lower and lower and lower, that's bearish. And conversely, if things are moving down, 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 but the volume's getting lower and lower and lower, even though the price is moving lower, that's bullish. So if you're moving up on less and less volume, that is bearish. If you're moving down and down and down on less and less volume, that is bullish. So you can see we've moved up higher here on lower volume. So that is bearish for bonds and most likely bullish for stocks. Tesla, we found this range down here. Nothing really going on here. If I had a bar that went down, reversed back up, that would be an example, Frederick. This is way under the 200-day, right? We know that. That's way up there. But if I could get, now that we've found somewhat of a bottom, if we could go down, like for instance, if I can manipulate this bar. If we did this today, that would be a V1. and it would show me that the market really tested below. So I would take that trade. That would be enough for me to take that trade, Frederick, even though we're under the 200. So I hope that helps. Natural gas, nothing. USO, we're going to have to get out of this at the end of the day unless there's some miraculous recovery. Visa, it's moving sidewards. If we had a move down, reversal back up, that would be good. VIX is down today, which is good. So, the market's rallying here at the end. So this is very healthy. This is good. Verizon, we talked about Verizon yesterday, and I pointed out that, you could view this as a possible entry trade because you have the moving averages underneath you. But unless you close under and close back above, that's not real confirmation. So this is what I consider an anticipatory trade. You are anticipating that these moving averages are going to hold. And I don't like those as well. So, and look what happened today, right? So obviously someone who anticipated that was incorrect. So, if we close below the 100-day moving average and then close back above the 100-day moving average, that might be interesting, but I would need to close first. It has respected the 100-day moving average pretty well in the past. So, there's a good chance it might respect this as well, but I would need to close under and a close above. Okay, we have 9 minutes. Energy under the 200, under the 30 RSI. So to get back into energy, I need to close back above 30. Real estate, we had this huge 2 big days down. It's not surprising to have a rally back up, but I don't know if it will hold. So nothing there. And healthcare. Yeah, nothing there. So let's go ahead and take a look at the stocks that I flagged and see, the markets. Let me take a look real quick. Yeah, all the markets have gone back positive now, which is nice. So let's take a look at the potentials, see if we can narrow some things down. Bruce says fractal down to the low. Let's take a look. Close. I mean, this one, we're not quite there yet, I don't think. But getting close. All right, Delta. If this closed back above the 200, I would I would be interested. So Delta is at a 53.24. So 53.24 is my level. Don't think Walt Disney's going to get there. Unlikely that Facebook will get there. Gold's going to be close, everybody. Look at that. 121.14. Oh, now they're equal. And if they're equal, it's legitimate based upon the back tests. So gold's looking definitely like a possibility. Pfizer. Pfizer's a possibility, a close back over the 200, but what I don't like the volume. See how the volume is anemic compared to the down day? So we'll watch that. PayPal, don't think that one's going to make it. And the QLD, which is double leverage, not quite there yet. So let's narrow this down even further. So Delta does not look like it's there. This is the Dow. Thing is, the Dow, buying the Dow back, buying the diamonds under and back over, does not really have good back tested results. So think I'm going to pass on that one. The DDM chart is much better, but the DDM chart is not even close to that. So Delta close back above, I would buy it, but if it doesn't close today, it could always close tomorrow. So Facebook, I really would buy it there at 184.60 because of the fractal moving back above all the major moving averages, and Facebook has held up pretty well. All right, we've got 5 minutes. All right. So first of all, I'm going to go ahead and I'm going to have to get rid of oil.
Order partially filled.
All right.
Order filled. Order filled.
Okay. Apple is closing strong, closing in the profit, which is nice. Intel looks fine. Lockheed Martin looks fine. Silver looks fine. SPY, we're going to be buying that at the end of the day. Delta's not quite there. Facebook's not quite there. Gold, Pfizer, and QLD. So I am going to go ahead and buy gold right now. Has a lot of things going for it.
Order partially filled. Order filled. Order partially filled.
121.63.
Order filled.
All right, so that's what we got in 121.63. All right. 3 minutes. I'm going to go ahead and I'm going to buy our SPY. Do our SPY trade. Oops, I just typed in the wrong signal. Be careful about that, folks. I could tell you some war stories about typing in the wrong things. One day I will tell you the horror story of all horror stories with typing in the wrong thing. That happened to me.
Order partially
on
filled.
the Japanese yen.
Order
Oy
filled.
vey. Don't wish that upon anyone. Actually turned out okay, but
Order filled.
all right. So we got our SPY at 278.89. All right. All right. Delta, no. Facebook, no. Pfizer, no. And Qs do not look like they're going to be closing above. I will get it queued up just in case we have a run here at the end, but I highly doubt it. But who knows? So we have 1 minute left. I do want to show you something. 86.35. So does not look like it's going to get there. We got 40 seconds. So this is what I want to show everybody. This is the 1 minute chart on the QQQs. Watch the volume in this last minute of the day.
Order cancelled.
Do you see the volume
Order
that came into the
cancelled.
Qs? Look how high this is. This is in the last minute. If you go back the entire day, do you see how high this last minute was compared to the entire rest of the day? That's why I like to trade in the last hour of the market, because that's where the majority of the money is coming in and the decisions are being made. But isn't that something? I mean, you look at the volume for the whole rest of the day prior compared to the last minute. Look how much volume comes in the last minute. So anyway, I thought it was kind of interesting to show you. All right, so Delta, we did not, because it did not close above the 200, but we'll certainly watch that tomorrow. Facebook did not trigger that fractal, but we'll be watching that again tomorrow. Pfizer did close above, but I didn't like the volume. And QLD did not close above, but we could certainly watch that for tomorrow. So, all right, so before we get to questions, I just do want to do my daily plug and let you know that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. And so, if you feel like that spending some time with me going over your current trading plan, maybe having me give you some suggestions, if you feel like that would be helpful, please let me know. I think it would be helpful for you. Initially, it starts with phone call or a Skype call, just to kind of, like I said, get to understand how you approach trading, what kind of difficulties you're experiencing, and me creating something for you to hopefully get you on the right path. So if that's of interest, my hourly rates and my contact information are in the description of this video. And then in addition to that, if you found today's video or my channel helpful, I would really appreciate if you would hit the thumbs up button. That helps with the search results and getting better results with YouTube, and to help me grow the channel. So if you could hit the thumbs up button, that would be really awesome. And it would also even be more awesome if you would be able to share this channel on your social media. So, okay, that's that. And let's see if anyone has any questions here. Let me just take a look at the final results. Yeah, so the market went positive today. That is a good sign, everybody. That is a good sign. So we have Apple, we did buy gold, we have Intel, we have Lockheed Martin, we still have a little silver. We bought SPY at the end of the day. So that is what we have at the moment. All right. Bruce says, have a good hike off to the dump. Going to unload oil. Oh, that sounds good. All right. Have a good one, bud. Appreciate you stopping by. Frederick, could you look at this share? MDM, French company. Okay. Let's take a look. Hopefully I'll have it in my charting, Frederick. It doesn't look like it. It pulls up MDP. MDM. Yeah, I don't think I get European stocks on this you want to post a can you send an attachment? Can I take a look at it that way? Sorry, Frederick. I wish I could help you with that, but I can't see it. But back, Frederick, when you asked what do you do when the market is lost, is under the 200-day? What do you do? Let me see if I can find an example. Let me see if I can find an example for you. Okay, so this is back in January of this year, Frederick, and do you see how we are under the 200-day? Obviously, right? And so you might think to yourself, well, what kind of signal could I, okay, sounds good, Frederick. What if I wanted to get into this market, what kind of signal would I wait for instead of having to wait all the way up to the 200? Well, here is an example. We're under the 30 RSI, and then we close back above. So that would be an example of a legitimate trade to get in before it moves back above the 200. Another example, see the 10-day crossing over the 50-day. This is the pink line crossing over the gray line. That is legitimate. That's a legitimate long position to take, even though we're under the 200-day. So, under 30, back over 30, under the 200-day is fine. A moving average, legitimate moving average crossover signal like the 1050 EMA or SMA is fine. Having a double bottom with a divergence, a V1, V2 entry, that is also fine. But my policy, I will take those positions, right? I will definitely take those positions, just like I took Apple. And why did I take it? Well, we went under, but we went over 30. But it's under the 200-day, so I took it, but I only took a half a position. So, yeah, under 30, over 30, moving average crossovers, double bottom with the divergence, double bottom with the bullish divergence, V1, V2 entry. That's also legitimate. Okay, let's see. Get back to, I'm lost. Okay, here we go. All right, yeah, send it on Twitter. So anyway, I'm finally glad that we had a little green today. It's been pretty brutal. But my best advice out there, everyone, is even if you're having a drawdown at the moment, be careful. Don't be impatient. There will be a time in the future where the market seems to go up every day. And at that time, you're going to think, how much higher can it go? And, now when we're going down, you think the opposite. You think, how much lower can this go? This is ridiculous. But these things happen. They'll go lower than you think. They'll go higher than you think. But things will eventually turn around. I don't know when, but we eventually will have an uptrend. But until we have that, be patient. Don't buy too large a position size. So anyway, all right. If no one else has any questions, actually, let me go back up there and see. Official Measy 100 says, but I invest on Robinhood. Oh, that's good. I think Robinhood's free, right? I don't think they charge any commissions, which is great. So yeah, thanks, Official Measy 100. I think this is the first time you're in the channel. Appreciate that, and I appreciate everyone else coming by and spending your time. Frederick says, did you trade like that in October 2008? Yes, I did. Yep, I did. But again, you're putting yourself in a position where you're buying under 30, back over 30. If you have 2 or 3 or 4 days that move your way, I'm phasing out and getting out. If it closes back under 30, then I'm getting out for a loss, but a small loss, because, getting in at 30, I'm going from 30 to 50. And if it goes, so I have 30 to 50, I have that range potential profit. If I get in at 30 and it closes at 29.99, I'm out. So, that keeps you safe in a lot of bad situations like 2008. Obviously, there's not a lot of crossovers. The only potential entries in a market like that are under 30, back over 30s. That's about the only kind of legitimate entries you're going to get. So, all right. Well, thank you for coming by. I hope you'll make it tomorrow during the last hour of the market. And if there's any questions that you didn't think of during the live stream, feel free to send them to me on Twitter or send them to me my email. It's located in the description of this video. So That's about it for today. I'm going to get up in the mountains and go hike. So have a good one, everybody, and hope to talk to you tomorrow. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.